and a very warm welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan. These are the top headlines from the startup space. Green hydrogen company Omnium raises $250 million in Series C growth equity financing round led by TPG Bryce Climate and others. The funding will be used to support Omnium's expansion to 2 gigawatts in annual manufacturing capacity.
Global venture fund Capria Ventures, which has backed Indian startups such as Better Place, Eduvance, marks the first close of its second fund. The $100 million fund will focus on investing in 20 to 25 tech startups across India, Southeast Asia, Latin America, the Middle East and Africa.
Nero, a consumer lending platform, gets $11 million in its Series A round through a mix of equity from Elevar Equity, GMO Venture Partners, Rebright Partners, Mitsui Sumitomo, Insurance VC and others. Nero looks to further expand its product and tech capabilities.
After PhonePe pulled back from acquiring lending startup Zest Money, citing concerns raised during due diligence, the Walmart-owned digital payments major is looking to strike a commercial agreement with the lending firm in lieu of an $18 million loan it had handed out to the company, say reports.
Uber announces the expansion of reserve facility across 6 more cities in India, giving riders an option to pre-book their rides 30 minutes to 90 days ahead of their travel. Uber Reserve will be available for cash payments, offering riders access to pre-booked rides.
Global tech giants surpass earning expectations amidst layoffs. Microsoft's net income rises 9%, driven by artificial intelligence. Alphabet delivers on top line and bottom line after missing estimates for last 4 quarters. Google Cloud business turns in a profit for the first time.
Well, those were the key headlines we're tracking for you today. It's a packed show and we'll start with what's growing. Over half of India's top VC investors believe that India's early-stage startups are overvalued. This as per an Innovent Capital report. Now, both deal sizes and valuations have increased in 2022, even as the funding winter set in, says the report. Akhil Vishwanath joins us with the key findings of this.
Yes, that's right. Innovent Capital surveyed 20 top VCs in India, and half of them believe that early-stage startups are now overvalued. Interestingly, all of them agreed that Tier 1 VCs and angel syndicates are the key factors that are leading this hype in valuations with higher deal sizes. Now, that's blurring the lines between seed and Series A rounds. Most importantly, large established venture capital firms are now extremely active in the seed stage itself, as per Innovent. As you know, Tier 1 investors or unicorn builders, the likes of Sequoia Capital and Accel, have been running seed programs. Tiger Global too made its first early-stage investment last year. As per the report, 2022 was the first time we saw check sizes of over $2 million being written for seed to pre-Series A rounds, compared to no such deals in 2021. And that was a year that saw record funding for startups. And nearly 50% of the deals were closed at a valuation of $5 to $10 million and $20 million in some cases. Another curious factor is, in recent years, there has been an increased interest from high net worth individuals looking to make startup investments. As a result, several angel syndicates have sprung up, but only a third of the investors surveyed consider it a positive for the Indian startup ecosystem. Now, even as caution prevails, the report highlights early-stage funding may still hold up, although there has been a marginal dip in the first quarter of 2023. Fintech, enterprise SaaS, and climate tech are the investor favorites for 2023, but any funding, the investors say, will come with an increased focus on governance and a more extensive due diligence process. Back to you.
All right, Akhil, many thanks for all those details. Now, HerKey, which was formerly known as Jobs for Her, got $4 million in a funding round. The round saw participation from Kalaari, 361 Asset, and a host of angel investors, including Zia Modi, Puneet Dalmia, Pramit Javeri, and others. Now, the platform has transformed into a career engagement platform that unlocks opportunities, learning, and communities for women in India by connecting them with career champions. Joining us now to talk about the fund allocation plan and the growth blueprint is Neha Bagaria, the founder and CEO of HerKey, and with me, my colleague Ritu. Neha, thank you so much for joining us on the show today. How do you plan to deploy this $4 million that you've raised? You have about 10,000 companies on your platform. How many more do you plan to add, and how soon can you get to your target of catering to 30 million women?
So the reason why we raised this money at a time like this is because we finally feel there are great pandemic tailwinds to women's careers. For the first time, I feel India has this opportunity to actually make use of this huge talent pool that we have lying outside the workplace. And the idea is to use this kind of funding to be able to build the kind of scalable technologies that we require so that we can provide these opportunities, learning, and communities to women. Today, we cater to about 3.5 million women on the platform. We want to increase that to 30 million in about 5 years.
Okay, so a 5-year timeline is what you're targeting. Neha, tell us what your business or revenue earning model really is. Is there a fee structure that you have? Is that fixed, and what kind of margins are you able to get in? That's one part of the question. And also when it comes to recruiting the top talent for companies, are you facing competition or stiff competition from some of the large headhunting firms which have established their niche?
Sure. I mean, our revenue model is actually based on the companies paying us to promote themselves to our women talent pool. So we have these prepaid subscription models which companies opt for so that they can put themselves out there from branding themselves as a women-friendly organization, really engaging with the women audience and humanizing their companies. And lastly, hosting a bunch of hiring or recruiting drives in order to get this talent pool to actually join them. We're also expanding our offerings to companies so that we don't just cater to the recruitment piece of it, but also work with them to increase the retention and promotion of women workplace so that we can have a larger number of women who are starting, restarting, and rising in the workplace. When it comes to the competition from other headhunters, in fact, they are also part of the companies that use our platform in order to find the talent, the right women talent, so that they can use that to cater to their corporates. Because at the end of the day, if you look at regular career platforms, the women participation in these platforms is only 15 to 20%. So we have to increase that pipeline first of women in order to equalize the playing field when it comes to recruitment.
Right. All right. About your revenues then and the targets that you've set for yourself for this year, where will the next leg of growth come from? Are you looking to enter more geographies, or are you looking at revenue diversification, new streams of revenue?
So today, the largest need that we see is in India, because India has only 20% women participation rate in the labor force versus America, which is at 55%, and China, which is at 60%. So our focus is first to solve this problem for India. And we are looking at, of course, doubling our revenue in the next year. And that will come, one, from having much deeper relationships with our current clients, getting more companies, and not just the large companies that have diversity goals, but getting every company in India to start focusing on getting more women into the workplace. And secondly, working on a much larger product line offering with our companies so that we can cater to the entire career life cycle of their women candidates.
Neha, very briefly, when it comes to women entering, re-entering, or staying on in the workforce, what are the biggest challenges, and are they unique to the position that these women are in terms of seniority levels?
So there are very different challenges at every stage of a woman's career, because the problem is that women's career journeys usually traverse through different phases of life. So when a woman is starting her career, the big challenge there is that, very often she is advised to take less challenging roles or, accept a lower pay. And that lower pay becomes a benchmark for future salaries. When a woman is restarting, there's a huge challenge over there because there's a big loss of confidence that a woman goes through. And that is further exacerbated by the kind of questions she's asked for in interviews, where people are always questioning whether she prioritizes her work or her family. When a woman is looking at rising in her career, there's a whole different challenge altogether, because that glass ceiling is real. There are still a lot of huge changes we need to do in our evaluations, appraisals, networking, in order for women to be able to shatter that glass ceiling and move ahead.
All right. If you could quickly tell us, in India, like you pointed out, only 20% of the workforce constitutes women versus 55% in the US and 16% in China. So how is your platform helping women in India to start, restart and rise in their careers, and helping firms create a diverse workforce?
So we're looking at it like a three-pronged approach, which is the three pillars of the HerKey platform. It's opportunities, learning, and communities. When it comes to opportunities, we want to make sure that we're opening up all these job opportunities and career opportunities for women. Getting companies to realize that every job is a job for her. Second, when it comes to learning, we're actually working with all our learning partners to curate specific learning programs for the needs of women. And it's shocking that no matter how evolved our edtech industry is right now, we haven't been catering to the unique needs of women in their career journeys. For example, not just focusing on hard skills, but also focusing on dealing with life skills and power skills, like what we like to call it at HerKey. The third piece is from the community's angle. And that is very critical because in India, what really holds these women back is not their education or their qualifications or their competence. It's actually the narrative and the messaging that we give to young girls and women at every phase, where we often make women feel that their career is not important or that they are not going to be able to crack being able to have a successful career along with being a good wife, daughter, mother, daughter-in-law.
Neha, thank you very much. Unfortunately, we've run out of time, but we wish you all the very best because we know there is an urgent need to have more diversity in the workforce. So thank you for your time here on Startup Street.
Thank you very much. Great
now, moving on the hot seat today, Doorstep fuel delivery startup Fuelbuddy is looking to expand its presence across India and Southeast Asia and soon start operations in the UAE market after it recently raised $20 million in funding. The New Delhi-based startup, which was founded in 2016, is also looking to improve its tech stack and expand to alternate energy such as electricity and gas. So today on the hot seat, we have the Managing Director of Fuelbuddy, Gautam Malhotra, joining us to take us through these plans. Gautam, welcome to Startup Street. And if I could start by asking you briefly, if you could tell our viewers, what is the business model for Fuelbuddy? And, how are you making revenues? And what is the current figure as far as revenues, margins, and profits for the company are concerned?
Okay, so the business model is fairly simple. We supply fuel doorstep. Everybody needs fuel for the generators or for their stationary assets, even for the earth-moving equipment for construction, etc. So if you look at customers, mid-sized customers whose demand is anywhere between 500 to 6,000 liters a month, they typically don't have any safe, pilferage-free, adulteration-free source of fuel coming to them. So we have the tech stack enabled for IoT enabled for ensuring pilferage and adulteration free fuel to them at their convenience, at their doorstep, at the time of their choosing. So that's the basic business model. In terms of our revenue, we've closed FY23 at about 600 crores. And in terms of profitability, FY23-24, we're going to break even and turn profitable for the first time. So yeah, we've been in the business for 4 years and we're turning around the corner now.
All right. Gautam, currently Fuelbuddy is in 130 cities. How many more cities are you eyeing an expansion in? And, could you give us a sense of what kind of market opportunity that you can capture in these geographies that you're looking to expand in?
So we're looking at minimum 50 to 70 more cities to add in this financial year. The market size is huge. Diesel is, and we primarily in diesel. Diesel is the largest energy source in India. India currently sells roughly about 1,000 crore liters and 1,000 crore liters of fuel every month. So the opportunity size is huge. In terms of geographic expansion, we're looking at closing in at about 200 cities.
And, by when, Gautam, are you looking to enter the UAE? And there, what are your plans? What kind of revenue is it expected to generate for the company from that market alone?
So we will be starting UAE operations in the month of May itself. We're all ready. We're ready to launch. We're testing our final tech stack, etc. We're launching a new tech stack all over wherever we are present, whether it's a UAE or India. So that's also ready. So that's going to be launched. And we're targeting that this financial year, we'll be getting at least 1/3 of our revenue from UAE. And another thing, we actually in the process of
this 20 million.
Sorry.
Okay, Gautam, this $20 million, will it purely be used for geographical expansion plans, which you've detailed for us? Or are you also going to use it for any kind of inorganic growth?
We're always open for inorganic growth. In the past, we've done the acquisition for My Petrol Pump in this space. We also, in the process, we're right now talking to a few players in the EV space. We feel as we're transitioning towards the energy side and positioning ourselves as an energy as a service player, we're talking to people in that space as well. Yeah, so we are open to inorganic growth. And the primary use of funds otherwise is going to be geographic expansion in India as well as UAE, and we're also launching within this quarter Mozambique and Africa.
Gautam, before we let you go, so far Fuelbuddy has been a fuel as a service company, but you're attempting to transition to energy as a service provider. What are the kind of tie-ups you're exploring in this space, and what would this entail in terms of revenue diversification? In the EV space specifically, what are your plans on that front?
So yeah, we're looking at a few things. We're looking at, like we supply fuel at the doorstep. We're also looking at supplying charging at the doorstep for a customer. We're also looking at static chargers to kind of back up that demand. In terms of gas, we're very early stages. We're going to be looking at that also towards the end of the year. And that's where we're starting our journey towards energy. In terms of revenue diversification, really diesel is such a big market that energy, as we move into EV also, the market size is too small for it to contribute significantly to our top line. So yeah, it's going to be a smaller portion, but it's getting ready for the future, what we're looking at.
All right. Lastly, Gautam, if you could also tell us, you have partnerships with IOCL and HPCL for the lubricant part of, your business. What is the plan on that front now that you're also looking at the B2C segment with, energy? Lubricants, are there further expansion plans there, or is your focus very much going to be on fuel and diesel like it has been?
So lubricants is an add-on. So what we're looking at our business now in terms of revenue diversification within our business, we're going to add a lot of products which are used by our customers, like lubricants or ancillary services, which are required for the generators or the equipment. We're going to get into all of that. Plus, there are other fuel sources which we can supply to them as well. I mean, for example, we're exploring things like LDO as well. So yes, that's what we're exploring in the fuel space. Lubricants, we've tied up with IOCL and HPCL. At the moment, we're offering this facility to our existing customers as we expand our footprint across this segment. In times to come, we'll be opening up this market for all the potential customers in the market.
All right, Gautam, we've run out of time, but thank you very much for being here on Startup Street and taking us through the kind of work that Fuelbuddy is doing. Thank you.
Thank you for having me.
On that note, it is time for us to head into a short break. On the other side, ONDC can boost India's digital consumption. We speak to the CEO, Tikoshi, to find out how. On the other side, stay tuned. Welcome back. You're still with us on Startup Street. Now, the government-backed open network for digital commerce has the potential to increase India's digital consumption by 5 times to around $340 billion by 2030, a report by ONDC and McKinsey says. My colleague Aishwarya Anand caught up with ONDC Chief Executive Tikoshi and began by asking him, in year of operations, what kind of transactions the platform has witnessed. Take a look.
From 5 cities, as of now, we are there in 226 cities. But in most of the cities, it's only few merchants. There are at least 17, 18 cities with more than 100 merchants. And there could be maybe some out of which 200, almost 100 may be having some 10, 15 kind of merchants. Okay, and that is continuously improving. In December, we had 30 or 40 transactions per month. Today, if I look at the total, among all the things together, we have something like 30,000 transactions a day. Let's be very clear, this has got among the various segments. We started with grocery and food, and then we started mobility recently. But mobility has risen up pretty fast. Out of his 30, maybe 23,000 might be from mobility.
So, sir, with mobility, you've onboarded like Ola, Uber, and...
No, they have all not come. 2, it just happened, only 2 of them. One is in Cochin, other is in Bangalore. Both had been launched by the first one to come was just the one who got the first one, which is called, in Bangalore, it is called Namayatri. In Bombay, it is, in Cochin, it is called Kerala Open Mobility Network. Maybe in their month's time or less than that, other few buying application also may make it possible for their buyers to buy from the same set of taxi drivers. Now, that taxi driver or auto drivers need not to go and register again. And we're hoping that it will happen in multiple cities too.
So, sir, on that note, on Hyperlocal, now PhonePe has launched its PIN code on your platform. And they have also mentioned that, in the next coming months, they will launch their Seller platform on the ONDC, network. So I wanted to understand from you that how is PhonePe doing currently from whatever you've seen? How is the business?
They said that they're going to give a specialized application. They launched in Bangalore. And it has been, they're very happy with the progress. Every day their number of transactions is increasing. And they said they're going to put their full might behind and to promote the PhonePe PIN code application and make it to a, what they call, infinity stores, where people will love to come and spend time, not just to make it, like in the other applications, the people just come make a payment. They should have a mechanism to really invest behind this and make it available to every of their platform users, every of their application users in the sector side, and which they said they will work on that.
So, sir, for the longest time now, the e-commerce space has been dominated by players like Amazon and Flipkart. Now, Amazon has joined the ONDC platform, and a lot of people say that ONDC is like a direct competition to Amazon. So, I want to understand how is...
See, this is an inclusive network, Aishwarya. Yeah. Everybody can be there. Amazon announced that they're going to be part of it, but they have started integration on their logistics side, and they said the other parts also will come. They haven't come.
Sir, one more question. How is ONDC enabling delivery assurance for buyers and payment security to the sellers?
So we have put in strict processes for that. If you look at whenever I make a buy application, the sellers can have two options. One is they can have their own arrangement for the delivery. In that case, they take complete responsibility. Otherwise, they can buy a delivery service from the network. So you would have seen all the large delivery logistics companies are already there. So, and all these transactions are completely digitally trackable. And also an online dispute resolution mechanism, which will be coming live soon, will help buyers or sellers who have problem to work on it. One more thing I want to highlight, we have a lot of small and medium seller and applications coming. They are going to bring their sellers, and they know that the only reason they will survive is if they behave properly. That will be a joint effort by us, then ONDC, and the various platforms that is available.
Well, global tech giants have surpassed earning expectations amid layoffs. Microsoft's net income has risen to 9%, and this was largely driven by artificial intelligence. Alphabet has delivered on top line and bottom line after missing estimates for the last 4 quarters. CNBC's Will Kalaari gets us a quick roundup of these earnings.
Let's take a look at Alphabet. So they came off by 2%. In the session, they actually jumped by around about 1.6% in the after hours. So net, it wasn't necessarily recapturing all that they had indeed lost, but their revenues were strong, particularly on the services side. They beat out by around about $1.5 billion. Their operating income also strong. Their capex came off, and their free cash flow was also much higher than expectations, probably a function of the FCF coming off in terms of estimates by around about $2 billion. But AI is the story, and here's a little bit of what Sundar Pichai had to say about just that.
We have significant multi-year efforts underway to create savings, such as improving machine utilization and finding more scalable and efficient ways to train and serve machine learning models. We are making our data centers more efficient, redistributing workloads and equipment where servers aren't being fully used. This is important work as we continue to significantly invest in infrastructure to drive our many AI opportunities.
And from one infrastructure spender to another, Microsoft also reporting their numbers. They flagged that they're going to be investing more when it does come to AI, and they absolutely knocked it out of the park in terms of a lot of the comps. As you can see here, these are their revenue expectations moving forward, also primarily ahead of the street. A little bit of softness when it does come to the Azure revenue growth on a constant currency basis, and there was a slight miss in terms of that when it came to this quarter as well. But as you can see by the after hours action, people were buying into Microsoft.
So that's the latest. Will there with the latest on all the tech earnings in the US. But with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.